Hi guys, Ben here and welcome to Motivation to Invest. Due to the recent global pandemic, travel restrictions were implemented and the planet was put into complete lockdown. One of the hardest hit industries was travel, and even more so cruise line stocks, which plummeted to record lows. However, then something strange happened. These cruise line stocks actually rebounded despite their companies earning zero revenue. Now, partly this was due to government stimulus packages, which boosted the entire stock market in general. However, it's interesting to see that these cruise line stocks rebounded more than the airlines. So why did the cruise line stocks rebound? Could they crash again? And could they be a good turnaround investment? To answer this, I'm going to turn to one of the greatest investors of all time. Howard Marks has predicted multiple stock market crashes in the past, and he is the voice of reason during volatile times. His famous investing memos are even read by legendary investors such as the great Warren Buffett. So in this video, I'm going to show you an exclusive interview of Howard Marks, which was filmed less than 24 hours ago. And I'm also going to deep dive into the cruise line stocks and look if they could be a potential turnaround investment or they are just too risky and you should stay away. Let's dive in.
Howard, a few days ago, Royal Caribbean, the cruise line, sold more than $3 billion of debt, secured debt, I should add, at a yield of about 11%. Now, I probably don't need to remind you, but this is a company with zero revenue and very little hope of returning to its pre-coronavirus state anytime in the near future. Yet the credit market is open to Royal Caribbean. How do you make sense of that?
Number one, they'll get more back into business than everybody thinks. Because, I think there's a knee-jerk reaction to say, well, the cruise ships were petri dishes for the infection. We have this image of people floating around on cruise ships, exchanging the disease with each other, being refused entry to ports, and so forth. Nobody will ever go back. I understand, Eric, that bookings for cruise ships in 2021 are quite strong, and that there is a coterie of fans for cruises, and they want to demonstrate their support for their beloved pastime. That's number one. Number two, the cruise lines, for example, do have great asset protection. And if you can come into a situation and if you can buy senior debt, which will be paid ahead of all the other creditors, and it's a small amount backed by a large amount of assets, then you can feel okay about doing it. Business won't come back 100% to what it used to be, but if it comes back 75%, the people who buy that senior debt will do okay. And then the other thing is that, the Fed buying has caused high-grade bonds to drop in yield. When people look at that, they say, man, those high yield bonds yield too much. We're going to buy them. That causes them to drop in yield. The people in the stock market look at that and they say, well, we can't get much yield from bonds anymore. Stocks look much more attractive. We're going to buy those. So those go up in price. We don't talk in the stock market about down in yield. So everything is relative to everything else. And the strong Fed participation and support of the markets has caused people to say, oh, a cruise line bond at 11 looks good to me. Non-energy high yield bonds yield about 400 extra basis points for taking the risk of a cruise line with good asset protection. We'll do that. And so they get sold. It's what happens in a market which is, I would say, artificially supported by Fed buying. So
let's talk a little bit more about the artificiality of it. In your opinion, Howard, would Royal Caribbean be able to sell secured investment grade debt at all, or just secured investment grade debt at a yield of 11% if the Fed weren't backstopping the market?
I don't know Royal Caribbean. I don't even know if it's Caribbean or Caribbean. but I don't know that company that well, and I can't, and I wouldn't comment on any one company. But I think it's fair to say that there is a yield at which they can sell well collateralized senior debt, even if the Fed were not in operation. But it probably wouldn't be 11.
Right, guys, so diving into Carnival Cruise Lines, we can see that over the past 5 years, the stock was trading between $40 and $60 per share, and everything was going fine, and the ship was sailing great. And then on the 31st of Jan, around that sort of time, there was a big plummet due to obviously the global health crisis. However, it hit the cruise lines even harder than you might imagine. Now, this is because, if you check out here, in January, an outbreak on the Carnival-owned Diamond Princess ship actually led to 712 passengers contracting the virus and 9 deaths, which is not a good sign if you're going on a nice vacation. So Carnival was obviously obliterated at that point. And then it received a nice little boost from the Saudi Investment Trust, which caused the stock to rally. So effectively, Saudi government now owns 8% of Carnival Cruise Lines. This act of goodwill, or purchasing a fallen angel, as some may call it, actually caused the other stocks, such as Norwegian, to also rally at a similar time, as optimism was in the air for this stock to also receive help. Now, as you can see, these stocks are very, very volatile. So as you can see, Norwegian Cruise Lines is up 17.95% today. Royal Caribbean Cruise Lines secured a $2.2 billion loan to keep itself afloat. The fact of the matter is that these rallies are significant, given that these cruise line companies are effectively earning zero, and that's just the fact of the situation. Checking out the stocks in more detail here. So it's currently got a stock rank of 62 over the last 30 days of trading. It says it's great value at 90, low momentum, and the quality. So that's just the numbers side of this. But as you can see, up until the incident, it was doing very, very well as a cruise line. So it had increasing revenues here, increasing profits. Current analyst consensus is to hold. So they're not saying buy, they're not saying sell, they're saying just hold at the moment. The PE ratio is obviously great, 3.5 here. The risk comes in with its current ratio. So the current ratio is how many times can this cruise line company pay its debts and liabilities. So if it can pay those debts and liabilities once, it should have a current ratio of 1. And really, with companies, you want to be looking for a current ratio of approximately 2 or 1.5. So at least it's got enough cash in the bank to cover its short-term liabilities and debts. In this case, it's 0.23, which is not a good sign for the cruise line industry in general. It's just got high debts. It's basically got bills to pay and no income. So there's a lot of traders in the moment, and they're looking at the cruise line stocks. And I believe if you're trading the cruise line stocks, you can make decent returns at the moment. So as you can see, it's up 15% today. So those people who are jumping in and out of the cruise line stocks, they can do very well, but it must be done with caution. If you did want to invest in these, as you believe the industry will recover in the future, I believe it will recover, but I don't believe it will be a simple and straightforward path. And I believe there's better businesses to invest in at the moment, also at great prices. So if I compare the cruise lines here, click compare. If you did wish to invest in a cruise line, which should you invest in? Now, according to this software here, it's compared Carnival, Norwegian, and Royal Caribbean cruise lines. It says Carnival is the best placed cruise line to invest into. Looking at its net profits, looking at its price to earnings ratio, it's got the lowest price to earnings ratio. So Carnival is in the best position to weather this storm out of the cruise lines. And it's also the company which has had the Saudi investment. So that gives it that extra security. Now, so if I did wish to invest in the cruise lines as a speculative investment, Carnival would be my choice. Now, let me just check if the Carnival's in the FTSE 100. So Carnival Cruise Lines is actually in the FTSE 100, which is the top 100 companies in the UK by market cap. So personally, I have actually already got shares in this company indirectly and in a safe manner. So I've got investments into the Vanguard FTSE 100 ETF, which is a great fund which tracks the FTSE 100. So that also has given me shares in Carnival Cruise Lines. However, because I'm not directly exposed to this company, my investments are a lot more protected. FTSE 100 is beginning to climb, but it really did take a sharp drop. And I believe the main reason for that is due to the fact that the main components in the FTSE 100 are oil companies, banking stocks, and of course, you've even got a cruise line stock in there. There's an airline in there. There's a couple of travel companies in there. So you can see why there's been a big fall here. Overall, I believe cruise line stocks are way too risky right now. And despite their recent rebounds, I don't believe this will last. Another issue to take into account is the psychological impact of this great health crisis. Will people wish to be contained on a giant metal ship in the middle of the ocean, away from all healthcare services, and pay over the odds for this luxury? I don't think so, especially not in the short term. However, I am optimistic of a recovery of the travel industry, definitely in Europe and especially in the UK. The UK is notorious for its bad, rainy weather, and the British will not sit on the sidelines forever without their holiday in the sun. So I believe in the long term, the government will have to ease restrictions and quarantine periods. I made a previous video on my top 5 UK stocks to invest in, and there's a special travel stock in there which I think you should check out. I'll leave that on the link below. In addition, be sure to check out the full interview with Howard Marks. I'll leave that on the link below. So what are your thoughts on cruise line stocks? Risky investment or turnaround? Comment your thoughts below. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex. I just wanna win, LABB who we running with, coming in, flex. I just wanna win,